So if you've got no credit, how are you supposed to start building it? I mean, it can feel kind of like this chicken and the egg problem, except in this case, there's also a massive cracked out predatory credit card ostrich chasing you around trying to kick the shit out of you and get you to pay attention to it. So in this video, I'm going to break down the 5 best options you have as a beginner for building your credit so you can stay far away from Mr. Ostrich. Now there's 150,000 ostriches in the wild, and there's about that many predatory lending companies trying to take advantage of these. So in this video, we're just going to focus on the good options you have, and there's really about 5 of those. So we're going to focus on the good options. The bad ones, we'll leave those for another day. Now these are going to go from the worst best option to the best option. So we're going to go from number 5 down to number 1. And number 5 is a secured credit card. So you've probably heard of a secured credit card before if you've thought about building your credit. Basically what we're looking at here is you get a credit card from a bank, but you have to put down a deposit that is equivalent to the limit on your credit card. So if you give them a $500 deposit, they'll give you a secured credit card with a $500 credit line. Now, this prevents you from just racking up a bunch of credit card debt and having no way to pay it off because you've already given the bank $500 of your own money that they have to hold on to, make them feel good so that they can sleep well at night. Now, there are some pros and cons associated with this type of vehicle. Obviously not the best, but we'll break it down. So in general, secured credit cards are pretty easy to get approved for, okay? Since you have your own money on the line, the bank is going to be a lot more willing to extend you credit if you don't have any history to begin with. Additionally, these are functional, okay? So compared to some of the other options we're going to talk about, you can actually use your secured credit card to go out and buy things and to just like take actual advantage of it. It's not just a tool for building credit. It's also a way for you to spend the money that you have in this account, okay? You can also graduate this thing into a non-secured credit card over time. So a lot of these secured credit card issuers, after maybe about 9 months to a year of using this thing responsibly, they might offer you to give back your security deposit and then upgrade you to a non-secured credit card, basically a normal credit card. So there's a progression path there for you. It also allows you to build good credit card habits because like some of these other options that aren't credit cards, you're not really building the habit of using this thing on a regular basis. And if you can build that habit of using credit cards effectively, that can open up a lot of doors for you in terms of rewards and things along those lines in the future. And speaking of rewards, a lot of these secured credit cards will actually let you build rewards and start earning cashback points, miles for the spending that you're doing on them. So all in all, they're a pretty effective vehicle. Your downside risk is also going to be capped. This is a pretty big deal because if you have an unsecured credit card, you can kind of just rack up a bunch of debt and then you've just got a lot of debt that you have to deal with. But with a secured credit card, the most trouble you can get in is the money that you already gave the bank, so you know you already have the money for it. So in the grand scheme of things, you can't really dig yourself too deep of a hole with a secured credit card. Now, additionally, it's going to allow you to build your credit the same way as any other credit card would. Okay, so a lot of people think that, oh, it's a secured credit card, it's going to show up different on my credit report, it's not going to do the exact same things. But on your credit report, the banks or whoever's looking at your credit report can't even tell whether it's a secured credit card or a non-secured credit card. It doesn't even show up there. So you don't have to worry about that. So it's going to be a decent tool for building your credit, okay? But again, it's not going to be the best. Now, the cons associated with a secured credit card, first of which is the upfront deposit. Okay, that kind of sucks. If you got to put up hundreds of dollars, maybe even $1,000, a lot of people aren't just sitting on that kind of cash that they can just throw in the bank and use as a security deposit for a credit card. You know, that's not a luxury that a lot of people have. So that's not great. Additionally, there is going to be a hard inquiry on your credit report, which if you're coming in with 0 credit, it's not going to matter all that much. You know, a hard inquiry is going to reduce your credit score by maybe like 5 points for about 6 months. So grand scheme of things, not a big deal, but it is something to keep in mind. And it also presents the potential to build bad habits. Okay, so I said potential to build good habits. There's also the potential to build bad habits and get into the habit of just paying the monthly minimum on your credit card and racking up a little bit of debt there. So there's some pros and cons to secured credit cards. All in all, not the best tool at all. But coming in at number 4 is a credit builder loan. So this is something that a lot of people might not have heard of, but it's not a credit card, it's a credit builder loan. And essentially what's going on here is you are loaning yourself money, okay? So you're basically making a loan to yourself, you're making monthly payments to yourself, and in exchange for that, a bank that is kind of facilitating this whole thing is reporting those monthly payments that you're making to yourself to the credit bureaus, okay? So this is a pretty cool setup because you don't have a credit card. So if you're somebody who is like very Dave Ramsey, anti-credit card, this is a really solid option for you because it allows you to build credit without having a credit card, and credit is generally a thing that you're gonna want if you're gonna wanna buy a house someday, buy a car, even just get an apartment. Like having a good credit score is a good thing for that. So With your credit builder loan, in general, these things are about $25 to $150 per month that you'd be paying into this savings account. And then at the end of the term, you get that full lump sum back to you, minus any fees that the company charged for facilitating this transaction. Because it's not a free thing, okay? They're reporting your stuff to the credit bureaus. They are kind of facilitating this transaction. So they're going to be taking a fee. Whoever is issuing your credit builder loan is going to be taking a fee. But at the end of the thing, you're going to get a big lump sum payment of all of the kind of contributions that you've made to this savings account. So a big pro here is that it's a forced savings plan. So if you're somebody who's not great at saving money, this could be a good way to incentivize you, or basically force you to save a couple hundred, maybe even a couple $1,000 over the span of a couple years, okay? Because most of these things are going to span from either 1 to 2 to maybe even 3 years in length, where you're making a monthly payment every single month. So at the end of that term, you're going to have a decent amount of money saved up that will all come to you in one lump sum. Now, like I said, there's no ability to get into debt on these things, which is a big plus. It's also really easy to get approved because the issuer isn't really taking on much risk. Like you are making this loan to yourself. They're just facilitating it and reporting it to the credit bureau. So they don't really have much on the line in terms of money, because they're getting paid based on the fees they're charging you, and those don't really depend on whether or not you're making your payments. So there's not much risk on the bank's end. There's also no hard inquiry, so it's not running that little check on your credit report that's going to ding you like 5 points. So that's a little bit of a plus. The last plus here is the consistent payments. So because you're making a consistent payment every single month, it's easy to budget around this thing. It's not like a credit card where your payments are going to fluctuate depending on what you buy. It's really just a consistent $25-$50 a month that you're paying towards this loan. Now, on the con side of things, the monthly payment is required. So unlike a credit card where it's going to fluctuate based on your spending, you got to pay this consistent amount every single month. It's also not functional. You get this credit builder loan, you can't spend money on it. It's just like you're putting money into this account, it's accumulating, you get it back eventually, but while you're putting money in there, it's locked away and you can't really do anything with it. And the last thing is the fixed duration aspect. So with credit cards, for example, you are building credit over time. You have this credit card and you can eventually, if there's no fee on it, you can just put it in your sock drawer and it's going to keep building your credit over time. But with a credit builder loan, when the thing's done, it's done, and it's no longer contributing to your credit score. So you have to make sure with these things that it's kind of like part of your plan to eventually transition into some other stuff. But with the credit builder loan, that the fixed duration is not a great thing, because it can't just continue to build your credit for you over time once it is done. Now, moving on to number 3, I don't want to spend too much time here because it doesn't apply to everyone, but it's a student credit card. So if you're a student, I would say probably start here. This is probably going to be your best option. But if you're not a student, keep going to numbers 2 and 1, because those are going to be even better. But student credit cards, it's basically a credit card specifically for students. A lot of them don't even require you to be a student, which is kind of nice. You got to read the fine print on those. But if you apply for a student credit card, it's very easy to get approved. If you're a student and you have a summer job or just any kind of income whatsoever, you're probably going to get approved for one of these things. It's going to allow you to start building your credit the same way as any other credit card would. And it is functional. You're going to start earning some rewards. Likely, with a lot of these student credit cards, you're earning maybe 1% back on everything, which is, again, you're not going to go on a free trip to Thailand on that, but it's definitely something. But the cons, big con is you got to be a student for one of these things, again, so don't want to spend too much time here. There's also the potential to get into debt, because now we're talking about unsecured credit cards. That means there's no deposit on there. So maybe they gave you a $2,000 limit. Maybe you spent $2,000, but you don't have $2,000 in your bank account. That's a pretty bad situation to be in. So this is where we start getting a little bit dangerous. It's also possible to get rejected for one of these things, which is not great. But if you don't have a job, or if you've already done something bad to your credit as a student, you're probably not going to get approved for one of these things. So that is something to keep in mind. So we're going to move right along to number 2, and this one's going to sound really good, guys, but number 1 is going to be even better. So number 2 is a no credit required credit card. And there's a lot of companies that do this, but basically what they do is, instead of looking at your credit report and your credit score to determine whether or not they should approve you, they're going to look at other factors that are potentially more comprehensive and more inclusive of your entire financial picture. So my personal favorite one, I'm not like sponsored by them or anything, but I know their founder pretty well. Had her on the podcast like 2 years ago. It's called Tomo Credit, and basically what they do is, instead of looking at your credit report, they just look at your bank account, and they check like what's your statement at, like what does your fluctuating bank account balance look like? Are you like going into overdraft? Is it like pretty stable? So they look at that to determine whether or not you'd be a good fit for their credit card. And because of that, it's usually pretty easy to get approved as long as you have either a job or a stable amount in your bank account, or both of those. You're basically a shoe-in. But if you've got at least one of those, you've got a pretty good shot at getting approved at one of these things. And the pros here is that there's no hard inquiry. Okay, so it doesn't matter that much, but there's no hard inquiry because they don't care about your credit report. They're not going to look at it. It's functional. You use this thing as a normal credit card, and it's going to report to the credit bureau as if it was, or it is a normal credit card. So they're not going to be able to tell like, oh, this was a no credit required credit card. Like, no, it's the exact same as any other credit card. And one of the things that I really like about Tomo compared to these other no credit required cards is that with Tomo, there is no interest rate and there's no fees. And you might be wondering, like, how can you have a credit card with no interest rate and no fees? How do they make money? Well, they make money off the swipe transaction, the swipe fees, where every time you swipe your card, they get a very small percentage of the transaction. So they do that like every other credit card company does. But how they're set up is that your credit card is set up for auto pay every 7 days. So it automatically pays your account off every 7 days. So there is no balance to accumulate at interest. So you're not going into debt with this thing, which is super, I think, a big plus, and it forces you into the habit of paying your card off on time and in full, even early. So I really like that about this card, and I think it's really good for people who are coming in at ground zero because it forces them to build good habits, which I think is like one of the most important things with building credit is getting those habits. Because if you have bad habits around credit and you're racking up credit card debt, like that is going to negate so much of the benefit of building credit. So having this to force you to build those good habits is a big win in my opinion. There's also the ability to earn rewards. I think it's like 1%. So again, you're not going anywhere crazy on this, but you are getting some cash back there. The only con really with a credit card like this is that there is the possibility that you get rejected. So if you don't have a job or a steady bank account, you're probably not going to get approved for this card. But with option number one, there's absolutely no possibility of getting rejected. It is like the best thing ever, but there is one downside. So let's hop right on in. So option number one is to get an authorized user credit card. And I've talked about these before, and I just really think there's such a good option for young people that are getting started building credit. And essentially an authorized user card is, say I have a credit card and I'm going to add you as an authorized user. Okay, what I would do is I would call my credit card company and say, hey, I want to add an authorized user. And basically what happens is they make a copy of my credit card. The numbers are different, but it's associated with the same account. And then you now have a copy of my credit card that you can use, and I'm responsible for all the money you spend on that thing. So I'm going to have to trust you quite a bit to give you one of these things, but you spend money on this thing, I'm responsible for it. And it builds your credit. And what happens when you get one of these things is that all of my history on this card is given to you. So if I've had this card for years, then all of those years of history are now on your credit report as well. All that payment history, all the utilization, all of these things that are going to build your credit go from me to you, but only on this particular card. So I did this, for example, I think like a year and a half ago, and the card that I was added to had like 16 plus years of history on it. And being, at the time, I was probably like 20 years old, like that was the majority of my life was on this credit card, and it boosted my credit score by like 30 some points, I think. So these things can be really effective for increasing your credit score very quickly, but the thing is, you're very dependent on the person that adds you to it because you get everything. You get the good, you get the bad. If they miss a payment, if they default on this thing, like that is coming to you. So you really need to trust that the person that adds you to this thing is a trustworthy person. They have good financial habits. And so for me personally, I mean, I have this authorized user card, but I don't even spend money on it. I've never used the thing because I would have to figure out like, I got to Venmo this person back, or I got to like get them the money to pay this thing off because they're responsible for this stuff. But if I spend money on it, like I'm gonna give them the money. So what they can actually do is if somebody adds you, if I add you to an authorized user card, I could just keep the card. I could just never give you the card. You don't have the numbers, you don't have anything, but you're getting all of this stuff added to your credit report. So it's going to build your credit regardless of whether you actually use the thing or not. So that's authorized user cards. They are such a valuable thing for beginners getting started building their credit because they just give you such a big boost out of the get-go that it's really just a no-brainer. Now, there's no hard inquiry here. There's a 100% approval rate because you're not applying for this thing. It's just you're just getting added to it, and it's potentially functional. I mean, if the person actually gives you the card to spend money on, could be functional for you. But again, then you're gonna have to figure out how to get it paid off. You're gonna have to like Venmo them or something, so it could be a bit of a hassle. But the big win here is like how big of a boost this is to your credit score because it impacts all of the factors of your credit score in a favorable way. Now, in terms of the cons, like there's maybe the potential for getting into debt here or souring a relationship if you like run up a big balance on this credit card and say, peace out, like you're responsible for this. Like that's probably not going to be great. So don't do that. And also if the person who added you to this thing starts getting into financial trouble, that's a potential risk factor. So you got to keep that stuff in mind. But other than those two things, like there's really not a downside to getting an authorized user card. in the grand scheme of things, you really don't need multiple of these things because one of them really does the majority of what they're going to do. But if you could add it to one of these things that has some decent years of history on it, like, I mean, 10 plus years is really, really good. So if you can get something like that, that's going to be a big, big plus to your credit score. Now, the next thing you should do is click the subscribe button down below. Check out this video over here where I go through exactly how to increase your credit score, how I brought mine up to over 800 by the age of 21 so that you can, once you start down one of these paths, you can actually be improving your credit score even more quickly. So I hope you enjoy that and have a wonderful day.